Yo, what's good everybody? Welcome back to another video in the Day Trading Institution. So in today's video, what we're going to be covering is simple. It is going to be Confluence Trading. Now, all you guys have to simply remember the term confluence simply means confirmation. So the more confirmations that you have within a trade, the higher the probability the trade is. Now, what separates our system from most people's system is that we actually have a scoring system that we're only going to be taking trades based off of this scoring system. Now, when it comes down to me making the scoring system, I tried making it as simple as possible, not just for you guys, but for myself as well. So all we're going to be doing in today's video is just breaking down a bunch of trades, right? So I'm going to try and keep this within maybe 30 minutes long. As you guys can see here, we still have everything from last time. So let's go over a quick recap. So when we have a 3 to 4 confirmations, that is a B trade, that is a medium probability trade, right? When we have a 4 to 5 confirmations, that is an A trade, right? Let's just keep that in mind. And then down here we have, what some of the confirmations could possibly be. So let's actually cover gold and start breaking down some of these trades, right? So when it comes down to gold, what I've identified is that 1870 is a level of supply and demand. It is a level of support and resistance. Now let's cover this trade right here, right? So now when we're actually looking to take a trade, right, what we could look for with this situation here after this big initial rejection is to look to go short. So if we were to start writing our confirmations, right, we have 1, supply and demand level, and we have 2, a bearish variation, right? And we have a high probability bearish variation on top of that, right? So already off the bat, this isn't enough to give us that entry for the trade. Why? Because we simply do not have enough confirmation. It's not that high of a probability trade, especially that price is still trending bullish. So what are we going to do? Simply wait. In a situation like this, don't get scared. Don't get scared of missing out on the move, right? Now, let's just think, because we have to, again, when we come down to the market, we have to identify, we have to plan, and we have to execute. IPE, identify, plan, and execute. So notice how price is trading down here. You have to ask yourself, okay, well, if price rejects 1870, where could price possibly head to next? And that's simple. Just go back to the daily time frame and look at the bigger picture, right? You know we have resistance, support here. And then all you simply have to do is look left and find the nearest level of support, nearest level of resistance, which is right here. So we've already identified that price is trading around 1870 and has a probability of coming to 1830. So we're going to wait for one of two things. Wait for either price to come down into 1830 where we could buy it back up into 1870, or wait for price to come back up into 1870 from where it's at for a retest, where we can then look for price to trade lower, right? My stop loss will be above 1870 resistance, and my target will be 1830 support. Notice how I've already identified what the market is doing and I've already planned a trade. All we have to do now is execute, right? And again, we don't have enough confirmations here just yet. So let's continue to wait for more confirmation for us to actually take a trade, right? So let's wait for price to actually come back up into 1870, retest, reject. Now, there's many ways you can actually plan on trading this. You can trade this with the scaling in methodology, where you take an aggressive position and then take a short position, but let's bump it back up to the daily, right? So on the daily time frame, what we see is an engulfing here, and then we see price retest and reject support and resistance again. So another confirmation is to retest, and remember, we have rejection. So now we're at a medium probability setup, right? Let's go back down into the 30-minute time frame. So we know we're at a level of supply and we're at a level of demand. What I'm going to do is I'm going to take one position here. I'm going to take this trade because we are already at a medium probability setup, right? We have a minimum of 3 confirmations. I'm going to take this trade here on this 4-hour time frame with a 1% risk. Why am I risking 1%? Very simple, because we only have 3 confirmations on this trade. We only have a medium probability setup, but we have high probability entry signals, right? So let's go back into the 30-minute time frame. And again, my stop loss is going to be above 1830 and my take profit is going to be, or my stop loss is going to be above 1870 and my take profit is going to be 1830, giving me about 5 times my risk. So now we have a grade B, we have a trade B setup, right? This is the first entry. Let's continue, right? And now we have a bigger engulfing candlestick there. And then we have a medium probability engulfing candlestick, right? It's up to the trader or not if they're going to want to take this setup. But again, it just gives us more confirmation, right? Now what we could do is H4, we have an engulfing off resistance, right? So now we have 4 confirmations. So now our trader has turned from a B setup to an A minus setup, because we need an A for an A plus setup. We need at least 5 or more confirmations with our trading system, right? So it's up to the trader now if they want to take a second position here. In this situation, I am going to take a second position, but only at a 1% risk, just because it is a medium probability entry. Now, just because you have an A probability setup doesn't mean that your confirmation candlestick is going to be in a high probability setup or a high probability entry candlestick. I'm going to repeat that for you guys one more time. Just because you have an A type setup, right, that doesn't mean that your entry is a high probability. Remember, you want to separate the entry signal from the setup. The entry signal is going to tell you, okay, sell now. The actual setup itself is going to tell you, yes, you're most likely, you have a higher chance of winning than a higher chance of losing, right? So in a situation like this, I'm only going to risk 1%. On a regular trade where this would be a high probability setup, I'm actually going to risk 2%. So I have a total risk of 3%, because remember, we have 1 position entered. Now, our first position, we're looking for 5 times our risk. Our second position, we're looking for 4.3 times our risk. So on our first position, all this simply means when we have a 5-to-1 risk reward ratio, it means I'm risking $100 to make $500. On our second position, all this 4.36 risk to reward ratio means is that I'm risking $100 to make $436, right? And let's just kind of see how this trade played out. So again, notice each and every time, this is the 4-hour time frame, meaning that each candlestick represents 4 hours of fluctuation, right? Notice how price went down in your favor 100 pips, which is a lot, right? So you would have pretty much been up your risk already. So you'd be up $200-300 already, depending on, you know, your account size and everything. But you'd be up $200 or $300, and just like that, you're almost at break even. Again, guys, you have to be able to sit on your hands as best as possible and let your trades play out, right? So let's kind of continue here, right? So one thing, again, look at this, right? Notice how price came all the way down to here and immediately came back up. You have to be able to sit on your hands and trust in your analysis, right? So now at this point in time, what I would do is move my stop loss to pretty much break even, just because we're giving price enough room to fluctuate. Or you can actually move your stop loss a little bit lower than break even. It's really up to you how you're going to trail your stop loss, right? Let's actually go down to a lower time frame and check for the nearest level of resistance, right? In a situation like this, you want to move your stop loss at least to break even now that price is trading down here, because this is our nearest level of resistance. This is our lower high point, and price is trading all the way down here, right? So let's kind of continue. So now if price actually breaks under this low and actually makes a new low, what you could actually do is trail your stop to about right here, where if price breaks this lower high point, you can actually close your position, and that's active trade management. So I'm going to set a stop loss. My apologies for the dogs in the background, guys, right? I'm going to set my stop loss at about right here, and we're going to continue. And all I'm simply doing is securing profits along the way by setting my stop loss here. So worst situation is I close the actual trade here, because remember, price can go all the way down here, almost at our target, and then reverse against us. So we want to have active trade management, right? So notice how price is continuing to trade lower and lower. Right now, what I'm going to do is I'm going to move my stop loss down a little bit more, just above this level, because remember, price is trading all the way down here now. So I can actually probably move it to right here. I'm going to put it to right where that lower high is. I'm going to continue to hold it. And right there, this is where we would typically get out of the trade. But some people, you know, this happened within an hour. You could have definitely held through that, and that's how you could have caught that move. Again, this was an A probability setup, but it was a medium risk entry on both entries, right? It was a medium probability entry on both of those entries. Now, what I want to do is actually break down a trade that I had taken recently, a loss and a win, yes, right? So when it came down to gold, right, what I noticed is after this move here, after this big bearish move, we have broken under the moving averages, and we've broken under 1795, which is resistance. Notice how many times price came up. Remember, wicks show price movement and where price traveled to and closed at initially, the highest point and the lowest point. Notice how price failed to break above 1795 so many times, right? Now, when it came down to that position, what I did was I actually ended up taking a short position right here, somewhere along this area here. I took a short position here. My apologies, guys. I took a short position here where my stop loss was actually a little bit above resistance and my take profit was down here, right? Notice on this specific trade, I had the confirmation there, right? On the daily time frame, we had a big rejection to the upside, which is one confirmation. You go down to the 4-hour time frame, we have the moving averages. Then you go down to the hour time frame. What you see here is multiple rejections, but you have to keep in mind, the higher the time frame, the stronger the confirmation, right? Then we had a big confirmation here, putting this at a B setup. Now, I had taken a little bit of an earlier entry off of a B setup on this 30-minute time frame, but notice how price still pulled back on me, right? Notice how price came all the way back up, coming pretty close to my stop loss. I want to say 50% of the way to the actual stop loss before going down and actually hitting my first target, which was down here at this level of support. This was my first target, right? Which is support here, which gave me about 2 times my risk, and that's why I took the trade, right? My stop loss was actually a little bit smaller. It was something along this area here because I remember it coming very close to my stop loss, right? Giving me about 2 times my risk on that trade. So when it came down to this trade, it was again a B type setup. But notice how the trade didn't go in my favor right away, right? And then price actually came down and engulfed. This would have made it an A type setup, giving me again the confirmation that the probability in my favor has just significantly increased. Why? Because this zone is resistance. All of this is resistance. Again, supply and demand, support and resistance is always going to be considered a zone, right? So again, if I were to list off the confirmations, we have 1, the SMAs, 2, the trend. The trend is bearish. Why? Because price is making lower lows and lower highs, right? 3, we have the engulfing candlestick pattern, and then we can even incorporate this engulfing candlestick pattern there as well, but I'm not going to. I don't like to incorporate multiple engulfings as a way to kind of like increase the confirmation. It's only one confirmation that you get. You can't have multiple confirmations from a single pattern, right? So again, it was a B setup, and then price went in my favor, and then that's where I closed half my position, wanting to run my position to down here, which was other target, and this position got stopped out by news. And then that's where I decided to take a break from the charts and look to get back in. So we can actually use the moving averages as a dynamic form of supply and demand, or a dynamic form of support and resistance, right? So notice how price actually broke support here and then came back up, right? When it came down to me taking this position again, let's list off the confirmations, right? The sells. 1, we have the SMAs. You always want to check the SMAs on the 4-hour time frame. On the 4-hour, they're red over blue. Now let's just go down to the hour and see how things are actually playing out here. We have 2, market structure, right? This is a level of market structure right here. Notice how price came all the way down, back up, down, up, and respected this level, giving us all this rejection, right? We also could pull a Fibonacci retracement tool from here and see that price rejected the 61.8 and then the 50%, right? So 3 fibs, 61.8. 4, we have the engulfing candlestick pattern, and then 5, double top. So this is another trade that I took. Notice how I have 5 confirmations, and I on mainly pretty much the same time frame, being the hour time frame, giving this in a setup. Right now, when it came down to me setting up this trade, I took the actual sell right here, and my target is down here at this -27 extension level, which lines up very nicely with this higher low of November being 1760. Now, when it came to the stop loss, my stop loss was a little bit above this high here, giving me a 2.7 risk to reward ratio, but I actually already closed the position over here because it's the holidays and I don't want to hold positions for too long. Especially, you know, in this choppy range, right? And that's where I got out of the trade, right? Once price actually broke support here, that was the, okay, you know, we've already broken support. Sellers are showing that they're still strong. And then you go to the daily time frame and you look at the daily and notice how the daily is actually trading under the 50 SMA. At that point in time, all that told me was that there's more sellers in the market than there are buyers. And notice how I'm kind of tying everything in together. We're starting off on the daily time frame and working our way down. Again, when it came to that day, notice how we broke under the 50 SMA, right? Price is rejecting 1795. So the same thing we did up here. Price rejecting 1870, our target was 1830. I'm doing the same exact thing. Price is rejecting 1795, I'm targeting my next level of support, major support, which is 1760. Excuse me, guys. But basically how you want to set up things, especially when you're looking for moves on the daily, is you want to trade in between the ranges, in between the levels of support, and you want to trade in between the levels of resistance. And that's where I decided to actually close that position then and there, right? Maybe later on tonight, I'll look for another trade where I could, again, look for an entry based off of this level of support and target support all the way down here. We could also pull a Fibonacci retracement tool from the highest point, from the lower high point to the lower low point, which we could see maybe 50%, right? There's so many ways you could look for different setups, but again, you only want to take A and B rated setups, and that's how I've been trading for the last few years, right? So in the, you know, I think I might separate this into 2 different videos, because I did actually take a trade here on silver as well that I do want to cover. So I'm actually going to make this into, I may make this into 2 different videos, but hopefully you guys understand the concept by now. I'm going to continue to record videos like this, and you can find way more content on Confluence Trading, you know, throughout the entire course, and then along with that, you know, through all the breakdowns and continuous education that we're doing. So I'll talk to everybody in the next video.